Hey, what's up you guys? Welcome back to another Investing 365 video. In today's episode, we're going to be talking about sports betting. And really, we're going to be talking about a specific company that has been around for a little while, not very long, but has a lot of potential. You probably know what this company is. It is DraftKings. And don't forget to like this video if you want to see more content like this. And if you want to help out the channel and also help out your personal investment knowledge, don't forget to smash the subscribe button. But without further ado, let's dive into DraftKings. And as you probably know, sports betting has been around for a long time. We don't even know how long gambling has been around, probably ever since the dawn of currency when people were able to make bets in person, but now it's moving digital. And that's why we're going to be talking about today. Honestly, this channel is all about investing in innovation and investing into the future. And this is one of those industries that still has a lot of potential to grow because it's so new as far as the online version goes. Obviously, gambling has been around for a while, but first I wanted to dive into gambling itself. So gambling growth over the last year has actually fallen. Of course, with the pandemic and all, people have been able to go to the casino tables, but overall, they expect that the annual growth rate for gambling itself, just gambling on its own, is going to be about 7% ongoing from 2021 and beyond, which is pretty incredible when you think about it. 7% is great. That means if you own a couple of casinos, that means you could expect your growth rate of, people coming in the doors or gambling, how much money they're spending, to grow about 7%, as long as people wanting to go to your casino. Now, sports betting, let's look at sports betting. In comparison, the US sports gambling industry could grow from 1.5 billion to as high as 81 billion by 2030. At the beginning of 2020, according to legal sports reports, 20 states have legalized and regulated sports books after a landmark Supreme Court ruling in 2018. 7 of those states allow online sports gambling. So I took the liberty, since it didn't show the annual growth rate here, I took the liberty of doing the math for us. And as you can see here, the industry is expected to grow 55.77% per year. So from 1.5 billion to 81 billion. So that's why in today's episode, I wanted to share with you guys this company, DraftKings, that is pretty much the leader in sports betting. And most of it is fantasy, but we'll get to that a little bit later. DraftKings user growth. So here we have DraftKings tally of monthly unique players grew by 64% year over year to more than 1 million in the July to September period, a stretch that saw the return of play for Major League Baseball and the National Basketball Association. So we just talked about a 55% annual growth rate, and DraftKings, being the leader in the space, had a 64% year over year user growth. So what does this mean? Well, if we already know 55-ish% is about how much the industry is poised to grow, we can guess that DraftKings probably saw this extra little bit of growth due to the pandemic. And if people enjoy using their platform and they want to bet against their friends and have a little bit of fun doing it, and because it's legal in most states, and I'll show you guys what states are legal and which states you can't do it yet, this makes for a very interesting position for DraftKings, especially if you're an investor. Obviously, DraftKings is going to do really well with those kind of numbers as long as they can keep that growth rate up. So next, let's look at DraftKings stock price. You would think, okay, year over year, up 64%. That's just user growth. Revenue should be up pretty decent as well. We'll get into that too, but look at the stock price. So I pulled up the 1-year chart and we can see that the growth from the beginning of 2020 to now, so this is exactly 1 year, we had a growth of 284%. That's pretty big. A lot of this does have to do with people realizing that it is a very interesting play, along the lines of DraftKings also is growing very fast. The industry is growing really fast. So those are already really good signs for why this price deserves to be where it is. $53 per share at the time I'm making this video. I got in around 30-40 right here in October, November, and I continued buying in as it dipped here. And if it dips again, I'll probably be buying in more. If not, it's totally fine. But next, let's look at the financials, and this is where things get juicy. So first, we have the 21 billion market cap. Again, this industry is poised to grow to 81 billion by 2030. I think that's conservative, and so does the market. That's why this stock's already at 21 billion. Again, they are the leader in the space. Sure, if they own half of the space, that's great. That would put them at 40 billion by 2030. That would only be a 2x in stock price. But I think there's a lot more at play here, and this is where the revenue is going to show us that that's the case. So here we have the revenue. In 2017, we had $191 million in revenue. 2018, we had $226 million, so a 17% increase. In 2019, we had $323 million with a 42%. They have also had to spend a lot of money to get to where they are as far as revenue goes. They're trying to eat up as much of the market as they can now because they want to be the leader in the space going forward into 5, 10, 20 years in the future, because there are going to be bigger players that are going to come in and they're going to want the market share. Amazon could be one of them, Google could be another one of them, and that could be in a moment's notice. They just need to come out with one good app that can rival this company, and ouch. That is why they have to spend more now, but the reward will also be greater. And as you can see, it's already paying off because the revenue has been increasing. We want to see this net income start to slowly go up in the next 2-3 years to really understand that, hey, DraftKings isn't going anywhere. Luckily, they also have a lot of good investors, but let's look at DraftKings growth specifically. DraftKings also raised its fiscal year 2020 guidance to a range of 540 to 560 million from a range of 500 to 540 million. It also introduced 2021 revenue guidance of 750 to 850 million, which equates to 45% year-over-year growth. Wow. That is awesome to see. Again, we were saying 55%. They had a 64% year over year from last year, and now they're expected to have a 45% year over year growth in 2020 to 2021. So that's a big leap and pretty much averages out to that 55% annual growth rate that we've been seeing. So that's good to see. Now, DraftKings competitors, you probably have heard of some of these, FanDuel being the biggest one, Cyanide, OBB, and Interspace. Very unheard of companies or unused companies, I would say, in my opinion. FanDuel being the biggest boy out there next to DraftKings. And we'll look at FanDuel just really quick. FanDuel isn't a public company. You have to buy Flutter Entertainment since they are the parent company for FanDuel. So if you're interested in looking at this one, I just wanted to point this one out to you guys too, because this video is more about sports betting with the intention of looking at the top guy in the space, which is DraftKings. So when we look at Flutter Entertainment, they've also been going up and up and up. And from the March 20th drop that we had here, they're up over 180%. But when you're investing in this company, you're not just buying FanDuel, you're buying all the other industries that they own as well. So Flutter Entertainment is more of a diversified option, in my opinion, but you can buy this. And that way, if FanDuel goes down one year, but yet the other investments that they have go up, you will be okay, and vice versa. So if the other companies go down and FanDuel does well, you'll kind of be evening out your portfolio. And obviously, we can look at their finances as well. They are going to be doing well over the long term because they have been around for a long time. As you can see, the revenue has been going up and up and up. And also, because they're an established company, they're going to have more employees to pay. Look, 9,000 employees. When we look at DraftKings, they have 869 employees. Much more room to grow and less overhead. So that's good to see. And I promise to show you guys why they have been expanding and growing as fast as they have. Look at this. This is a graph of exactly where you can do daily fantasy sports. And why is this important? Well, when you look at a graph of where legal sports betting is allowed in the United States, you can see that most states you cannot do sports betting, right? And DraftKings has found a way around that by doing fantasy sports betting. They also incentivize you by giving you a free amount of money when you deposit a certain amount of money. So let's say you deposit $500 to bet with. Now they're going to give you an extra 1,000 to kind of say, hey, stay with us, right? And then you'll over time continuously buy more in because it's fun and because your friends are doing it too. So they have a great business model, in my opinion. They want you to use their platform. They want you to get hooked. They want you to have fun. They want you to play with your friends. And they also have the most amount of availability of where you can do this in the United States right now versus regular sports betting. But let's look at what Investor Place has to say about this. At the fundamental level, it's clear more states are open to sports betting. Election Day 2020 proves as much, and DraftKings is likely to benefit from the arrival of regulated sports wagering in Louisiana and Maryland. The political climate is favorable on other levels. Notably, the recent additions to the sport betting fray are realizing the benefits of partnering with gaming companies and not saddling state lotteries with managing sports wagering. Second, there's significantly opportunity for DraftKings internet casino business as more states hunt down additional revenue sources. It won't be a straight line to 100, but DraftKings can appreciate significantly from current levels. So that leads me back to DraftKings price chart. Where do I think the stock is going? Well, looking at the 1 year, I mean, you can look down and say, look, DraftKings has been 11, 12. Weren't these the best places to buy? Sure. But there was a lot of things up in the air at that moment of, I don't know, right? I don't know if this company's going to survive. I don't know if regulators are going to be okay with it. I don't know if it's going to grow or shrink. I don't know if these revenue numbers are because of growth or is it because of frivolous spending by the owners? Is it risky? Is there a lot of downside risk? All these things we're not aware of. And now, even looking at now, you can see that there's a lot of volatility in this stock. I mean, it went from just right here, we can look, let's look from here, July to October. So we're talking in 3 months time, 2.5 months really, we went up 116%. And all of a sudden from October 2nd to November 2nd, 1 month time, we went down 43, almost 44% in that short period of time. So is this stock volatile? Absolutely. Should you be careful with your investments? Absolutely. Unless you made a bunch of money and you're like, I don't care, risk equals reward, and you're just throwing it around. At that point, do you, but do your own research. Make sure to not label this as investment advice because it's not. But where do I see this company personally? I see DraftKings as being a long-term position. I don't see this company as I'm trying to trade it all the time. Sure, you could buy a call option here, sell it here. You're making incredible gains. But if you get caught in one of these landslides here, you might not recover for months and months and months. And if your option contract expires, game over. So how am I going to be playing this company? Well, I'm going to continuously buy on the dips like I have been. Every time it does end up dipping, I'll buy a little bit more into my position. Until then, I'm going to hold and hold and hold. And where do I see it in a few years? Well, I'm probably going to be holding this stock from 2025 to 2030, anywhere in between there. Again, dependent on price, dependent on how they're doing, depending on earnings, depending on how FanDuel does. And I'm going to be paying close attention to regulators because if they say, we don't want this, I'm going to get my money out as soon as they say that. If they say, we do want this and we want to make more money as a state or as a country, we want to lift bans on sports betting, we want to actually continue the growth of how this company is doing, great. I'm going to put more money into it. So a lot of it depends on what the market decides. This is a time will tell tale. And honestly, I like this company. I like this company for a very long time. A $21 billion valuation, I could see easily a $200 billion valuation in the long term. Sure, they say, oh, sports betting could grow as high as 81 billion, which also is dependent on if they're able to execute on perhaps reaching out to not just sports betting, but perhaps even betting on gamers. And that is a whole video on itself because esports betting could be a huge industry that is not even explored yet and could be 5, 10, 20 years down the road, which I'll make a video on this very, very soon. I actually do have a video if you want to go check it out on Huya. I can link it down in the description below if you guys are interested. So hopefully you guys enjoyed this video. If you did, leave me something down in the comment section below that you either like to see or maybe you liked from this video, and I'd love to hear from you guys. Feel free to like this video if you found any value. Go smash the subscribe button as well. And without further ado, I'll see you guys in the next one. Peace out. Feel free to check out the links down in the description below where you can get a free stock from Robinhood, $20 free from Stash, 2 or more stocks free from Webull, or $10 free from M1 Finance.